What's up, guys? Welcome back to DCA. So what we're going to do in today's video is take a look at a metric which I think can tell us a lot about where we're at in the market right now and what we may expect going forward. So this is one of these on-chain metrics that I often look at in order to assess how heated is the market right now. Now, I never want to look at a single metric when I'm analyzing the crypto market. So every day, what I do is I open up this chart. So this is the Bitcoin price that we have in this color-coded index here. And then in pink, we have this risk metric. So this is called the UDPI long risk metric. This is essentially telling us how overheated or how oversold the market is. So when we have these red colors up here, and I'm going to hide the metric because the metric is essentially being represented by these colors here on the Bitcoin price. So when the market is extremely overbought, that is the point where you'll see this chart turns red, okay? And that's indicating to you that the market has run up way too fast, way too quick, or we're just simply reaching the top of a market cycle. And so you'll notice that happens at all of the major peaks in the crypto market. So it's back here in 2011, then in 2014, again in 2017, 2018, and then here in February, March of 2021, and then again out here in November of 2021. So you'll see that when we reach these bottom points, that's where the market turns blue. All right, so the scale for this metric is 5 to -5. So when you're at a 5, that means we're way overheated. And when we're down at -5, that means the market is way oversold. So these blue colors. Now, where are we at this moment? So you'll see that we are sitting at around a 1. Okay, so if we just zoom in here, we are sitting right at around a 1. And what that's essentially telling us is that the market, while yes, a 1 is above this neutral level, the 0 level is going to be your neutral level. A 1 means there's still a long way to go in this market cycle. Now, this is a long-term risk metric. So it's not telling us what's going to happen or, how overbought we are in this exact moment in time. It's telling us with relation to the entire market cycle. All right. So what I'll be looking for in order to tell me that, hey, we've reached the top is for us to reach into these 4 and then ultimately towards the 5 level. That will indicate that we are at a top. So we know right now that the market is a bit overheated, and I don't think that's a big surprise to anyone, right? Like we've just went from around 15K up to a peak right at around 45K. And now we're sitting at around 42K. So, nothing earth shattering there. But anytime that I look at one of these metrics, what I want to do is to relate it to other metrics. And I want to see if there's continuity between those different metrics and how can we relate that to one another. And so today I want to look at a different metric, which actually has a huge amount of continuity with what we're seeing right here. And I think it suggests something, at least if we can look back to prior market cycles as examples of what may happen from here. All right, so this is the Bitcoin supply and profit. And this metric is just as simple as it sounds, but I think it's quite telling when we take a look at it with a historical perspective. So what it's asking is, if there's a coin that has moved on the network, at this moment in time, so at $42,814, is that coin in profit right now, or is it sitting at a loss? So what we can actually see is that at this moment in time, about 87% of the market is sitting in profit. So with that said, I want to look back historically and attempt to understand how has this metric played out in the past, and what might that be able to tell us about what we're seeing at this moment in time? So what we can see is that anytime we reach a new all-time high, right? Anytime we're at a new all-time high, we tend to find that 100% of the supply is going to be in profit. And that's just a simple mathematical fact. If we're at an all-time high, you obviously are going to be sitting in profit. Some interesting things come to light though. The first, let's take a look at this blue risk level down here. So I like to think of this as a proxy for a risk metric because we know that the cryptocurrency market, as we've said many times, is largely retail dominated. And because of that fact, we see a lot of the same things play out over and over and over again. This is why I love this market. And, this is going to be changing as we go forward, guys. A lot of this retail dominated maneuvering that we see, this repeatability of a lot of these metrics that just play out exactly like they have over and over and over again. Because even with the BlackRock thing, I don't think this market is all of a sudden going to become institutional dominated in the next cycle. I think there's still time. But because of that fact, we can hugely capitalize on human psychology, on individual investor behavior, because it just plays out exactly like we've seen it over and over and over again. And so this is one of the reasons that I feel like I've been so successful in this market, because if you're just able to appreciate that fact and understand how these dynamics play out, this market can be absolutely crushed. You can capitalize on the information we have from the blockchain, from the open ledger. You can't do this in the stock market. I don't know exactly where individuals are holding Microsoft at the moment. I don't know where their exact supply distribution is. I don't know how long they've been holding them at those various levels. But because we do have that information in the crypto market, we can capitalize on it. And I think it's a shame that so many people out there just simply ignore this type of data, because, if you're interested in making money in the crypto market, you have to be looking at this. Like I've said before, it's like a cheat code that you simply don't have in in any other market, really. Okay. So what we see is that every time that the supply gets down to around 50% at profit, so that means 50% of the holders are in profit, 50% are at a loss. Every time we get down to that level, right? That is typically a time where the market is essentially reaching towards a bottom, because, ultimately what you find is that the people that are still holding once you're down at these levels are going to be your super long-term holders. Those are going to be the guys who are still sitting in profit, the guys who have been holding for years prior to this, whatever market cycle you're in at the time. They're holding from before that time, right? So when you're down here at 3,200, these are guys that bought at least in August of 2017 or earlier. So they've been holding for years at this point, and they still haven't sold. All right. And you'll see that in this cycle, the same thing kind of happened. We got down to right around that 50% level of the network was sitting in profit at this point. And once we got to that level, look where we were at. And you can see this in every single cycle. So if we just, draw a simple line here, right when we got down to that 47% or so, boom, we were right at the bottom. And again, in this cycle, at the bottom. And in this first cycle, if you go all the way back to 2014, that's where we were not at the bottom. We were at 297. And ultimately the bottom, did go down significantly farther, but it was a flash crash and recovered, quite a bit even on that same day. So once you get down to this around 50, down to around 45% of the network in profit level, that is the point where you can comfortably say, at least based on what we've seen in the past, that, you might not be right at the bottom, but you're very, very likely going to be pretty darn close to it. All right. So another interesting behavior then tends to play out in each of these market cycles as we are making our way up, as we're making our recovery, right? So we've bottomed out. It typically has lasted, if you just want to look back to the bottom, has typically taken about a year and a half. Same thing here, about a year. And then in this cycle, it took us about from the top just down to the bottom around a year. But then you typically grind down in that bottom level for some time. And what we can see is that at each of those points, that's where we've hit, right around this 50% of the network is sitting in profit. That is the point where we've started our recovery. And what has happened then? Well, notice I want to point out 3 different points in time for you. So the first is right here in 2016. The second is right here in 2019. And now, not surprisingly, one is right about where we're at now in December of 2023. So you'll see that in each of these points, this is where the market has made a large recovery. So just going from the bottom, you'll notice that from there up to that point was around a 400% recovery. Then in this cycle was around a 300% recovery. And now, not surprisingly, around a 200% recovery. So 400, 300, 200. Each of those points shows us that the network is sitting at around 87 up to around 90% in profit, right? Like right here in 2019 and right now. And so that's a point where investor psychology, and remember, we said it's all about investor psychology. That is a point where you sort of reach a transition. Now people who have been getting crushed, absolutely crushed since back here in 2021, now for the first time, they are finally sitting at a decent profit. And what you'll find is a lot of people are going to be willing to take some profits at this point. Now that we're up at around 90%, nearly everyone who owns Bitcoin is sitting at a profit. And realistically, the only people who aren't sitting at a profit right now are these people who bought the very top, right? And the people who just bought up at, who bought it at around 45K or so. So it's a very small number of people right now that are holding on this network and are not sitting in profit. So that just leads us to a place where you tend to see people are going to take profits here. And let's just see how that's played out in the past. So if we go all the way back here to 2016, what happened after we reached this, kind of this overbought point? Well, we saw the market corrected down around 40%. Okay, so there was a 40% correction. Now, that correction didn't last very long, right? We kind of leveled out somewhere at around down 30%. That 40%, I guarantee you what happened is that scared a lot of people. It scared a lot of people. It shook a lot of people out of the market, okay? We come back here to 2019. What happened? So this first correction saw us go down to around 45% or so. A second wave of corrections saw us actually go down around 55%. And then, we can count the COVID crash, but ultimately, that was truly a black swan event. So, all things considered, that may or may not have happened, but it did. We went down 72%. But if you want to just ignore that, we can say that the market still safely corrected 50% from that point. So in our first cycle, we saw a 40% correction, then a 50% correction. Even after that 50% correction, let's look at what happened then after this big, huge drawdown, right? We saw the network, being highly unprofitable again, or largely unprofitable, all the way down to this 50% level. We again got back to this 90% level right around here. What happened from there? The same thing, because people had, the market just recovered. It's easy to forget about this, but the market recovered 217% right there, right? So what happened then? Well, again, we saw the market draw down 23% before the market really went on a run. And I know that doesn't sound like much, but consider, that's a pretty big drop. What if we had a 22% drop right now? And that was, pretty much a flash crash, right? A 22% drop right now would put us down to around 35K. So what if we had one of these larger corrections though, like we saw back in prior market cycles? Where would we be at? Well, in the first cycle, we said it was around a 35 down to around 40% correction. Okay, so that would put us all the way down to somewhere at around 30K, just south of 30K. What if we had one of these corrections like we had in 2019, where it kind of leveled out at around 50%? Okay, and I think, it's pretty easy to understand. We'd be somewhere between 25K or maybe just south of 25K. Is that realistic? Well, if you remember back to a recent video that we made where we talked about where our support and resistance levels are, yeah, I think it ultimately is something that could happen. Could be the kind of thing where we've seen back here in, if we go back to 2016, where it was a flash in the pan type of thing, where we had this huge correction before leveling off at around 30%. Or it could be the kind of thing where we saw back here in 2019, where the market just kind of grinded downwards for months, 6 months or more. Realistically, until the COVID event, it was just 6 months of downward movement in the market. So, I'm not trying to be an alarmist here. All I'm saying is you have to understand that just a simple move down to 40K or something like that, or move down to even like the high 30s, the market has shown us many times that, while our upside over time may be diminishing, our downside has been, it's sure as heck been willing to reflect prior market cycles. We've seen drawdowns in every single cycle similar to the prior cycles, right? In spite of the fact that we have diminishing returns over time in this market. So what I'm getting at is, we could definitely see one of these big corrections. Now, the upside to that is, well, you've just gotten a taste of the market. For a lot of people, I think this was their first true bear market. And, a lot of people don't, there's a lot of misinformation out there in the crypto market telling you that only, you got to experience it back here in 2021, only up, right? And I think we all know at this point, only up is a bunch of BS. So a lot of people appreciate the fact that we can have large corrections now. So, you've just watched, and this is just Bitcoin. This isn't even including a lot of the altcoins, which, ultimately went on a much bigger run than this. But you've just experienced the fact that this market can go absolutely ballistic out of nowhere. You've seen a 200% move just for Bitcoin. So the point is, I think a lot of people didn't necessarily dollar cost average in the bear market like they maybe wish they had. So if we do have a correction, well, okay, great. You've now seen what can happen in this market, right? It shows why acquiring the asset in the bear market can be so fruitful. So if that's the case, take this opportunity, and this is not financial advice. What I would do if I did not acquire in the bear market is I would take this opportunity to, use the myriad tools that are available to you, whether it's the risk metrics that we offer on polaritydigital.io, where we have risk metrics for Bitcoin, we have them for Ethereum, and we have them for most of the top altcoins. This isn't the only risk metric we have. We have about 6 or 7 risk metrics for every asset that we offer. Okay, so regardless of what you're using, there are tools out there to help you understand where the market is at. There's data that you can use to understand how overheated or how oversold a market is. Forget all these people telling you all this stuff that's, based merely on opinion or based on some event that happened one time in the past and doesn't have any other historical basis, right? Using data can really help you enhance your ability to understand these markets. So take that opportunity then, again, not financial advice, but look to dollar cost average. If there is a correction, take that opportunity to acquire more of whatever asset you're interested in or whatever assets you believe are going to make a large move in the market whenever the next bull run truly does come along. Now, just because we're seeing this at 87, 88% right now, doesn't mean that we are going to have this correction. It's merely pointing out to you that there is a historical precedent in place that suggests that we could see a large correction from here. So if it were to come, look at it as an opportunity and not as something, this big, terrible punishment that's coming to you. Look at it as something that you can actually use in order to secure your financial future. Because ultimately, I believe that if you make quality, correct, well thought out decisions and have a quality plan in place in the crypto market, it doesn't matter who you are, you truly can, significantly improve your standing financially by making good decisions in this market. So with that said, guys, that's going to be it for this one. Until next time, as usual, see you.